The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we better put the pedal to the metal and take a look at the metals. Woo, I was a poet and don't know it. I makes it rhyme every time. Well, let's stop having fun and get back to work. The first chart we're looking at, of course, here is the silver chart. And as you can see, we made that 61% retracement late last week. We went sideways, folks, for 4 days. I mean, we couldn't even rally more than 20 cents, which was a very negative thing. So you want to keep an eye on that. And, you know, just watch it really, really close because it looks like we're heading down to that longer-term price level at $18 an ounce in the silver. We're only 60 cents away, and you know, half of a move like we're having today, we could be there today. So that's one of the things that we're watching. Now, we've been sort of negative to gold recently, and as if we take a look at the chart that we featured in the newsletter this past week, as you can see, we have this black downtrending line. As you can see, that there's a lot of support coming in here at the 1325 level, which is the 78% retracement of the move from that we had from early July, middle of July, then up to the high where we made the double top and then down again. That would come in right at 1325, and we're not very far away from that. We're only a few dollars away. Failing 1325, as you can see here, sets up our ultimate objective that we think we could be looking at, which is down around the 1270, 1268 level, which is the 61% retracement of the move from way back in June. It's also going to be a 38% retracement from the move that started when we had the 3 drive to a bottom pattern, you know, back on the end of the year in December. So that's the main thing that we're going to be looking at. We were not able to get Rich Anderson yesterday. Rich has had some things to do business related, so he's had to do some traveling. So he's not where he can get a really good connection for anything. So we'll have him on next week for sure. I think that's the main thing. What I'd like to do now is I'm going to change the program here just a little bit. I want to give a hats off to someone who passed away recently, our good friend Bill Ehrman. The chart that you're going to see now is the type of work that he does, and fortunately, Bill has had some students over the years. I wasn't one of those because it was way over my pay grade, and I just didn't have the energy or the time, you know, to really study it. Several of my students have certainly gone on to work with him, and it hopefully will carry the torch a little bit. But what you're watching here are the trading days going back to 1942 and how these cycles from highs and lows come out and turn into future things into the future, because what happens in the past will happen in the future. Now today, if you remember, is the anniversary of the flash crash where we dropped 1,000 points in the Dow and in a matter of a few minutes, and then of course came right back, which probably was caused by some type of a hacker, who knows. But anyway, the main thing I wanted to show you here on this chart, there's 2 charts here that one of his disciples was going to forward on to me, and I'm hoping that he will definitely continue Bill's work, because it is certainly really, if you like Pythagoras, if you like Fibonacci, this is the kind of thing that Bill worked on. Anyway, it's basically saying that the high was made in the stock market yesterday on August 23rd, 2016, and that should mean that we are going to come down quite a bit. If you'll look at the middle of the chart from the period of 1968 through 1982, you'll notice that the market did absolutely nothing during that time period. And what we're watching here now is a market that has completed a major expansion to the upside, that 1, 2, 3, 4, 5 expanding triangle that we've looked at, you know, all along. Now, what you don't see when you're doing this is the theory behind the work, and that is what's important, because if you look at this, one second here, I've got to do this a little bit differently here. Where is it? There it is. Ooh, where is it? Shucks. Hold on just a second. I'll find it. I'm just not the... Oh, here it is. Hold on. There we go. We're all right. Well, I don't know if I'm all right or not, but at least I found it. If you'll take a look at this one, this is the one that's really interesting, because this shows the same type of thing that we were just showing you, only it's showing you geometrically, you know, what these things look like. And if you'll notice, they're all related to the golden mean triangle. All of these ratios that they're looking at are related to this. So, you know, this is really an important time that we're watching. So just keep an eye on this, and maybe down into the future we'll have some of these folks on as a possible guest here at TFNN to discuss some of the work of Bill Ehrman. The ironic part of this was the fact that, you know, Bill was graduated from Harvard. His specialty actually was music, but he had never placed a trade, which is, you know, really amazing, but really not as exciting as the work that he actually did. You're correct, Mr. Bill. That is 3 drives to a top on the long term, which is also part of that expanding triangle that we look at. So that's something else that we want to keep in mind. I need to check something here in the gold market, because I wanted to see if we got down to that 325. But we've only been down to looks like 1330. I think this is really, really close. It should hold 1325. So we're within a $5 range on this. So we'll keep an eye on that, you know, very, very closely to see, you know, how that works out. Now, what I wanted to do here is to go over one of our things that when we watch the stock market each day, and of course all night, we watch the DAX index, because that's the one that, you know, really focuses on what's happening in the market before we open. Well, this is the big daddy rabbit over in in Germany and the UK, and as you can see, you know, the market opened sharply lower today and then rallied very quickly to go to a 78% retracement, and it stopped there, backed off a little bit. And what that tells us is that that's pretty good resistance. But as we know, when resistance fails, the market can go, you know, a great deal higher. And so what we're going to do is to follow this through today, just to show you what the DAX has done so far today, because you'll see how it follows the number sequences that we look at very, very nicely. And if you look at this, after we broke that 78% retracement, as you can see, I marked that with black lines. And those are just simple trend lines, and we have a real wide range bar breaking the last one there at 10,600. You immediately rallied up, you know, to the 1.27 level, which is 10,650. Now that's 40 points in the DAX, which is equivalent to a 20-point move. Let's try that again. Yeah, it's equivalent to a 20. Let's try it again. Yeah, it's a 20-point move in the S&P. 50 points times 20 is $1,000. 40 points in the DAX at $25 a point is $1,000. So that's it. Now we're going to go one further, and when we get back, we'll finish this up. But we have to pay a few bills now for our good friend Tom O'Brien. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I think we're going to have Rich Anderson on. I've got preliminary indications that he's going to be near a good spot to log in, so we'll know here in about 12 minutes if we're going to be able to reach him. Okay, now what we're going to do now is we're going to take a look here at that E-mini S&P yesterday, because it did go up and make new highs. But the thing that we were trying to impart is the fact that even though it was making new highs, it was making several major patterns up there. You had an ABCD pattern over the last 5 days. You had a 3-drive pattern over the last 3 days, so you had a lot of things going on. And then after the sell-off that we got last night, all you've been able to do is to, at least so far, is to rally up to this 2187 level. That tells us that we have some pretty good resistance between 2187 and 2189. That's all it tells us. Now, if we do make a new high here beyond the 23rd, I don't believe it's going to go any higher than that, because we did get non-confirmation in the Dow Jones and all of the other major indices like the Dow Jones Transportations and the Dow Jones Utilities. Neither of those did either to help the program at all. This is an interesting one that we talked about yesterday. I want to just give a little bit of a update on this, because we got some further information also on another chart that I wanted to show you. But if you look at this VIX index going back to 2006, going back 10 years ago, you'll see that we're in the absolute low end of the range. And to me, you just call the St. John Bosco Widows and Orphans Fund and tell them to put a few bucks on a long VIX call, or just be long the VIX, because bad things are coming, folks. This thing, every time they disavow it, it makes it look, really, really bad. So we're at really at a really big area. Now, we're going to take a look here from the Bank of America Merrill Lynch research department that sent a similar type one, but it doesn't go back as far as the one from the Wall Street Journal. But as you can see here, we are making new lows below August 13, telling us that there's very, very little fear in the market at all. This has a pretty good record for picking highs and lows, in my opinion. And you add it with some of the other things like patterns, it can really get you to a level that really makes it look, really interesting. So keep that in mind. and I think it'll be interesting. By the way, I will be doing that webinar tonight. I've got some really interesting things, to work on. One of the things I'm going to be doing is to walk you through a actual trade here, and this is what we were doing last night as we were trading. You'll notice here in the euro, you can see this euro position where we had this nice trend line that was defined by perfect 78% retracements. And so what we were saying then is that the failure of that 78% level sets up a move down, to the 1245 level, which was down here, which would complete another ABCD if that were to happen. So that was one of the things, that we were keeping an eye on very, very closely. And the 786 level actually held for about 25 pips, and then and in this sense, this is a an hourly chart. It held for like 3 hours and got up to 113.07, and then it totally collapsed. And so far this morning, we've been down to 112.49, very, very close to spot on what we were looking at as our level for a really nice ABCD. And that would be the place where, if you're interested in on the long side, would be something that you'd want to be keeping an eye on, because we did get down to that level. So you want to watch it very, very closely. Now, I've had several private messages here about the gold and the silver. Folks, I think you have to wait to 13.25 in the gold just to see if it's going to hold, because if it does not, you're looking at some really serious, well, I think it's pretty serious when you're down as much as you are today, but, that's another one that looks, really, really interesting. If you want a really interesting trade, look to short the British pound at the 132.50 level. That's a big 78% retracement, and we have lower tops all along. I'll see if I got that one in the den here, because that was another one that we were sort of keeping a very close eye on this morning that should give some pretty good indications of where we are. But we're breaking down in the gold and the silver, so I would certainly wait. Let's just take a quick look here at silver, on the long-term daily. And as you can see, we had the ABCD form. We have not rallied at all. It's just been making lower lows, lower lows, lower lows. You're now below the 50% level, so that sets up that $18 per ounce level at the 61% retracement. So I certainly can't see any reason to enter the silver market at this point. I'm very bullish long-term in silver and gold. It's just that I think we've got a shot at the gold and silver to get down lower, and that's what I would like to be seeing. Whether that's going to be the case or not, we'll just let the market wizards decide, what's going to happen with that. Now, one of the things that I'm going to talk about tonight on the webinar is how, we have these trading platforms that are available to us. I'm going to put this one up here. This happens to be commodity. No, it is not a Head and Shoulders, Mr. Bob. I already looked at that. It is not. This is a commodity quote graphics platform, and as you can see, you'll notice the bid and offers there, where you see 230 on the offer side, 167. What I'm trying to show you is, you see those red boxes above and below the bids and offers? Those are BS orders, folks. You get anywhere close to those disappear like magic, because those are people just trying to test the market. If they come anywhere close, those will be dissipated. Believe me, I watch this, and it just does not work that way. There are Merck members that have these terminals that show where the real orders are, but we don't have access to that. What we have access to are the first few levels of what's really happening with this. So keep in mind that when you're watching these bids and offers, they disappear very, very quickly. This is years ago when we traded on the floor. These decks were held by someone's hand, and he had two order fillers there. As he went through the deck, they had to pull out these orders one at a time to have them filled. And now that doesn't happen. These are filled in seconds, and you don't have out trades where someone doesn't recognize the other side of it. So this is the real key, to watching this electronic trading that we have. And this is one of the reasons why we have so much people, so many people that are looking at high frequency trading and automated trading, because they want to get away from looking at these bids and offers, because they really don't mean very much. That's primarily what I see when I'm watching this for sure. One other thing I wanted to mention before we have Rich on, and that is we talked about the emerging markets yesterday, and even though they were giving us a bunch of malarkey about how great things were looking, you'll notice we hit that perfect 61% retracement and then sold off relatively dramatically, and that equaled the same moves that we had in 2012, 2014, and 2016. So every 2 years we've had these really strong rallies, but this is still a major, major downtrend. The high on this market was somewhere around 70 back in 2008. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, let's see if we have Rich Anderson on the line. Rich, are you there?
Yeah, I'm here. I'm sorry about yesterday. My headset and my microphone wasn't working. My apologies.
You think you get a nice plane like a Gulfstream 7, they would give you at least a nice microphone, wouldn't you, Rich?
Yeah.
Hey,
yeah.
That's a little standing joke. Rich, I posted the chart for October cattle into the room because a few months ago, wow, what am I talking about? 1 month ago, we had the low in cattle down around that 105 a pound. We rallied 11 cents up to the 78%, and now we pull back to the 61% retracement. Can you tell us a little bit about what's happening to the cattle market now and whether this might hold support here?
Well, there's reports come out all the time, on whether it be oil inventory, but the July 31st cold storage report came out, and that shows that cattle in the freezers is up 3%. We keep killing more than we had anticipated, and the demand just isn't that good. Near as I can tell, this is my extrapolation of what's going on. The people are going out to eat less than there's, if you can get a reservation in a restaurant right now, whereas a year ago you couldn't. And that's where all the high-end expensive cuts of beef are. That's the majority of them are sold there. When people eat at home, they're not necessarily buying the high-end cuts of meat, and that's just caused some softness in the demand. I think a retest of the lows is the area that I'm watching. The market structure shows you, with August $3.50 or so over the October, that it's front end loaded. I think there's going to be opportunity, but I think they need to recheck their lows. That's the way these markets have been trading. So that's what I'm looking for. We had that big reversal 2 days ago.
Yep.
We should have shown more yesterday, and we didn't. And that tells you there's something wrong.
That's one of those reversal patterns that we like to look at is, when the market doesn't hold major support, that usually means going to the other side. We have a question about hogs. You got a feeling about the hog market, Rich?
Yeah, actually I do. Our numbers are up, and our demand index on hogs has been really disappointing, probably for the same reasons. And then the secondary thing is it's trying to, they can come in and change the hog market like that. I would anticipate that if we're going to rally, we're going to start that rally either Friday or Monday of next week. There's a seasonal for a rally. If you buy hogs on, I think it's the 28th or something like that they go up 14 out of 15 years. It's one of the more researched things. Mm-hmm. But that rally I don't expect it to last past the 1st of October. And then with all these numbers coming at us, extra hogs and demand being soft, I think we could retest the lows as we go into the end of the year, mm-hmm. and then some. But this is a time of the year when there's a rally. That's a seasonality they don't work every time. You can have something work 15 years in a row, and that doesn't mean it's going to work the next year.
That's for sure. Do you still use Steve Moore out of Oregon for some of your seasonals?
They do good work. I have friends that tell me about trades that they think I might be interested in. I don't actually read the service myself, but they do good work. But it's like everything else. It's about when you put on a position, you got to control your risk. And it's all about timing. The only difference between garbage and salad is timing.
Whoa, let me write that one down. That's a good one.
Well, that doesn't matter whether you're a quarterback and there's that second where the receiver's open. And if you get the ball there, it's a completion. If you don't, it's an interception. And so I think that's the problem with these seasonal trades is that the people see something that's worked 14 out of 15 or 15 out of 15, and they just put it on bluntly. And lately, the market's front-run it, and it may be a week or two early, they'll start to, let's say it's a spread trade, they'll start to already take off. So by the time you have the date and you put it on that date, it might already be overbought, and you're trying to buy it. And so that you just can't blindly look at that stuff. So it's interesting when people tell me stuff, but I look at my own technicals. It's much like when people tell me about astrological things that are maybe going to happen. Well, over the years, I found that for whatever reason, there's more energy in the markets when somebody tells me something like that. So I'll be watching closer, but I'll still use my own technicals.
You have to. You got to have a responsibility for your own trades, no question. Let's get to the business of trading, and I've got a chart for you I want you to take a look at. This is the December wheat chart. We made new lows last night, and boy, we've got a pattern that looks exactly like the cattle market. I mean, it's just has ABCD patterns all over it. You want to give us an idea of what you're looking at here in wheat?
You know, I was studying that one about a half hour ago, and it looks like there's all kinds of divergence. This is a, you know, if it's going to hold, it's got to hold in here. The demand in the world hasn't been all that great. By the way, the reason, in my opinion, that the market sold off yesterday is Russia's talking about cutting the export tax, and if they do, there's going to be more grain in the Black Sea region of the world to compete, and that put a little pressure on the markets. We also have and so the bottom line is, I'm interested as long as we can close today with some strength. I'll be a buyer on any follow through tomorrow. That's the way I'm playing it. I saw it this morning. It's, you know, it's divergence. It's everything you could ask for. That's the kind of chart pattern I'd like to see in the cattle. If that were the cattle market right now, retesting the lows, I'd just be buying it because I think it has value. The wheat either catches here or, you know, the wheels are going to fall off the bus. The Pro Farmer crop tour is going on right now on corn and beans. And this seasonally is the time of the year when, you know, they come out and, oh, we're going to have these big crops, and they start to roll over. And the wheat actually catches at this time of the year, and the corn and beans, you know, are the ones that take the gas. But that last USDA report had 175 bushel yield on the corn. The guys, they go out and they measure a so many feet area of the corn, and they take the ears, they weigh the ears, they count the rows, count the length of the corn, and they're not coming up with anything close to what the USDA had at 175 bushels an acre. I don't know how they could even project that when it was the third fewest years in the last 3 years. I'm thinking it's probably going to be closer to, you know, 165. That's still a huge crop. That's still a huge yield. But we won't know that until the September 12th report. And that could be a real curveball to the markets. And that might be some very interesting opportunity for the corn. Particularly the funds are big shorts right now. If they continue to stay short and press the market, I think that'll be a very interesting time. But the wheat, as long as it, you know, it looks like it's right now it's a doji. It's a long time till the close, but if it closes in the upper third of the range, I'll be buying it tonight.
Hey, stay with us, Rich. We'll be right back, okay?
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Rich Anderson of Anderson Capital Management, and we're talking a little bit about the corn market. Rich, you know, we had that big 3 drive to a bottom pattern a few weeks ago when we made new lows, much like what we're doing in wheat now. It's amazing to me how well corn has held up. I mean, considering we've had big moves in beans and wheat, but the corn seems like it has a lot of demand technically from a chart standpoint.
Well, this is the time of the year when Mexico puts on their option program. And so every day they're in there and they're buying a couple thousand options in March and a couple thousand options in May. And that, you know, the option traders that are selling those then have to, you know, adjust with futures, and that kind of put a bid under the market. Wouldn't be at all surprised to see it retest those lows as we come into the 1st of October. But, you know, because the yield that the USDA reported the last time was so big, if in September they report less, I mean, it can, you know, you can catch everybody on the wrong side of the road and really get it going. Normally, rain makes grain, but at this time of the year, all this extra rain is making for a bigger and bigger soybean crop, and corn is so much cheaper than soybeans right now that, you know, there could be some opportunity there. It's just that we normally, as we go into the first part of harvest, we'll retest the lows. And then after that, we'll start to creep higher. Much like, I'm kind of looking at it kind of like 2014. In 2014, the markets made their lows around the 1st of October. The D's corn proceeded to rally, 87 cents before it went off the board. In the March corn, from its lows, the rally was about almost $1. I think it was 97 cents. And there was no appreciable difference in the demand, and the supply was already set. But that's what can happen when the money flow comes out one way. You know, everybody's short, and then they come out, and then they start to go the other way as the guys coming out to the shorts turns it into a friendly picture. The thing you have to watch is the dollar. If the dollar were to get really strong, that puts pressure on all commodities. By the way, you had a great trade in the silver. I mean, when you told people to start selling that, it's dropped almost $10,000 in a relatively short period of time. That was an awesome trade, Larry. I got to give you credit to that one.
Well, one every 10 years, Rich. I'm looking forward for next 10 years. If I'm here, it had another good one. So, hey, listen, We got a question from one of our favorite people in the room, Mr. Z. He's asking, how do they when your brother sells the cattle? How does he do that? I mean, he pre-sells it and they just pick it up and deliver it, or what do they do when you sell your cows?
Well, normally you're loading them up in a truck, you know, and a lot of times they want to load them up and they deliver them kind of overnight, so they're delivered early in the morning, so that they aren't carrying a bunch of feed and water in them, you know. So there's real weight if you're selling them live. Sometimes you sell them just hanging on the hook, you know, after they've been butchered, you know, and you're just doing the carcass. That's why you see the difference in the bids. You've got.
But how do you see? How do they set the price, Rich? How do they set the price? The
Packers come out early in the week. The Packers come out and say, "Oh, okay, we're going to bid, let's say we're going to bid 112 and they traded 118 last week. I'm just making these numbers up. They actually traded about 115 last week. And let's say they traded 115. The Packers are saying they're going to pay 112. And the feedlots are saying we're going to sell them for 118. And usually late Thursday or Friday, they finally come together. A lot of the cattle are pre-contracted. But when they really need them, they'll say, we'll buy them $1 over best price for the week. Then you don't have any risk that if you sold them on a Monday at 112, that they could end up on 118 on Friday and you've missed $6. If they really need them, that's what they'll do. They'll give you a bid like that. But each packer, you've got your regional packers and you got your national packers, and some packers are only looking for specific kinds of cattle. And so their bids are only for, a certain type of cattle. Some are GMO free, no finishing additives added to them.
So it's a game not to be played by the rookie. Is that correct?
Yeah, because I mean, literally, not recently, but there have been times when you've sold your cattle early in the week on a Monday or Tuesday, and then there's a $5 or $6 move. Well, at that time, a year or two ago, these cattle are trading at, let's say, 80 cents, and they move $5 or $6. That's a huge percentage change. And so then when cattle got a little short, the packers would say, well, you don't have to worry about that. We'll give you $1 over best price this week. Or if they really start to need cattle, they'll start saying, we'll buy them for delivery 2 or 3 weeks out. That shows you that there's demand, and but we don't have that situation right now. We got a lot of numbers.
That's what my grandma used to tell me, don't trade anything that eats. So, yeah. Hey, listen, let's take a quick look here. We're going to have a break here, but what do you think about the gold market in here, gold and silver? You still think we got more to go on the downside?
Well, I'm watching the silver particularly close. I'd looked for it to go down in that 1880 to 1850 kind of numbers that you were originally talking about. I figure it's a value area, something down in that 10 to 20 area. That right now I'm lowered my stops to yesterday's highs. If we close higher than we opened today, I'll probably say thank you very much and take a walk. We have option expiration on Friday, so the option traders, they have to adjust their gammas, and that's helped accelerate it. The gold didn't break much until today. That's a function. Gold is tacitly a currency. And with the currency expectations, macro-wise, in Japan and in Europe, gold has lost its bid, and therefore today it's down $13. But it had barely sold off compared to what the silver had.
That's for sure.
And I still think that gold has value from China and from India in that 1265 to 1280 area if we ever get down there. And we have so much money being printed in the world, and all this quantitative easing, like in the EU and in Japan, they run out of things to buy because they set that we're only going to buy X percent from this country, X percent from that country. And in Japan, they run out of bonds, so then they start buying the ETFs of the stock market. And everybody's starting to say, hold a minute, we have to rethink this because we put all this extra money into these economies, and it hasn't improved our GDP at all. For the last 2 years, it's just a flat line. So maybe we got to do something different. And actually, an interest rate increase would show that they have some confidence in the economy. So Chair Yellen talks on Friday. We'll see what she has to say.
Hey, listen, buddy, I want to thank you for coming on. I know you did went out of your way today to help us. So we'll have you on in a few weeks, and travel safe, okay?
All right. Appreciate it. Watch that wheat. I like it too. Bye-bye.
I do too. We'll take a look at it. That was Rich Anderson of Anderson Capital Management. And one of the things we're watching, folks, is the wheat market. We've got a chance here for wheat to make a pretty nice pattern here. And keep an eye on it because it's one of those patterns. It looks very, very similar to the cattle pattern that bottomed at the 105 level. So just keep an eye on it and see what happens because it's very close. We could easily have one more little sell-off down there, and that would make an ideal ABCD type pattern completing. That's what we'd like to see here. So that's 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. A couple quick things here. If we're looking at this British pound US dollar short that we talked about at the 132.60 level, we hit that exact number a little while ago. We're trading about 8 or 10 pips below that. So anything above 132.90 would certainly tell us that there's something wrong with this trade, and you'd have to take your $180 loss and run home and tell Mother what a bozo I was giving you that information. However, keep in mind that you should be looking at buying some October or November VIX calls. I would risk about half the value of whatever it cost you to buy those calls, but I really think that's a trade that just set up so perfectly that, you know, nobody in the whole world thinks that this could ever turn, and we've seen this many, many times. Historically, you're looking at some really low prices, and also you're looking at some possible major topping patterns in the indices with divergences, you know, all across the board in the Dow Jones Utilities, Dow Jones Transportations, Dow Jones Banking Index, the IBB, the Russell. I mean, there's just so many of them there that could make this happen. And when you add to that there's virtually no interest or no volatility left, you know, you're watching something that would be, you know, something that you would think would be very, very dramatic to the downside. So just keep in mind that that's what could happen, and I don't think it's going to happen today, but if you buy the calls for October, I think you'll be just fine. And you don't have to go far out to do that. So those of you that are doing that, just remember that you don't want to risk any more than half the premium that you have to put up. So it has a very good chance of, you know, looking at the main thing of being able to quantify your risk, and that's what you have to do. Your profit on that, what I believe, would be tenfold. That's why I like the trade very much. You might be a little bit early as usual, but I still think it's got a chance. Okay, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.